Hello, team. Welcome to the Market Minute. Today is October 25th, and we are staring a little bit of red on our screen. I want to go ahead and share this 10-year Treasury chart with y'all. And if you take a look, you can see this here. We did have this significant move. You saw it. We bounced off of 5. Everyone's talking about 5%, 5%. We hit 5 and then saw this significant buying came into the Treasury markets. We saw some tweets, Bill Ackman, Bill Gross, talking about maybe changing their sentiment. Those guys have been right. They've been wrong. They're on both sides. The trade has been good for them, at least so far. But as we're taking a look, we saw that buying that came in, and now we're kind of directionally going back upwards. We're staring at 491, 492 on that 10-year. And what I wanted to do was just zoom out for a second. So we see this short-term kind of chaos in yields, but let's just take a look at the 3-month and what this looks like. We are what? We're trending. We're trending up. The sentiment is higher for longer. Jerome Powell is going to be talking a little bit later today, and really, data tomorrow is going to be really important. That GDP number, if we get a significant beat on GDP, we can see this trend continue. We can see it even accelerate and blow through 5%. If we get a number that is kind of at par, we'll kind of continue to see this trend. This isn't about being negative. This is about being realist, and the market right now is showing that we're going to be higher for longer. So that's the sentiment. If we see slowdown, though, if we see a slowdown tomorrow in GDP, that's going to be a big deal. This is going to be going over, obviously, Q3 data, or the first looks for Q3. And right now we're forecasting 4.3. If we have a miss, there's an opportunity for a little reversal here and a pause and a real, see what the Fed is going to say on November 1st. Otherwise, we're going to continue with this trend. So Fed data, GDP tomorrow is going to be real important. That's 8:30 in the morning. We'll have continuing claims and jobless data is going to come out tomorrow as well, the typical Thursday data set along with GDP. So we'll keep an eye on that. That tight employment growth, that's what the Fed is kind of looking at and why they're continuing to increase interest rates. So what does that do? Let's talk about coupons. Let's talk about MBS pricing. I know you guys are tired of me saying it, but what we're seeing right now, we're not at the low end of pricing. We're not at the high end of pricing as well over the last 5 days. We're kind of in this higher middle portion of it. And all we're seeing right now is there's a lot of confusion in the market. We're seeing a lot of illiquid coupons. A lot of people are struggling to price. So what does that mean? It means to open up your rate stacks. You're tired of hearing me say it. I say it all the time. You got to open them up. We had occurrences again, 7 1/8 was paying more than 7 1/4 was in a certain circumstance. So this has to do with lenders, how they deliver to Fannie or Freddie, the servicing values, the buy up, buy down grids, all this crazy stuff is going to the equations. And each lender has a little bit different scenario or different value on where they put loans. This is the same with Ginnie Mae. You have some lenders that keep more servicing, others that try to get it sold in the securities market as much as they can and keep those servicing strips as small as they can. So you're going to see variances in price. So open up your rate stack. You can even check by note rate in Arrive to find out which lenders pay the most or pay the best on that particular note rate. So keep on opening those stacks and finding value for your customers. We do see it unlock this. We will come back to you if we see a lock that comes in or something that has been reviewed. And if there's something that is off and we have a price that might be a little bit better at a lower interest rate, we're going to let you guys know about it to try and help. But please take a look at that. Don't mind the live capital markets daily huddle that we have that just popped up on my screen. So anyway, I'm going to run to that because I'm late. We had a great weekly sales meeting talking about our Winners Win event. I'm so excited to head up to UWM. I've never been to the facility. I'm excited to check it out. I will be there along with a lot of the team. So I'm excited to see everybody in person next week. So if you guys have any questions for our team, please let me know. And if not, lock them if you got them. Thank you.